What an insane week it has been for the markets. Not only did we have a plethora of earnings this week, as well as more to come the following week, we also had PCE inflation coming in at 4.4%, however, slowing down from 4.7% the prior months. The Canadian dollar slips as Bank of Canada signals pause for rate hikes, and because of that PCE coming in low, and on top of the Canadian bank signaling that they're going to pause interest rate hikes, now investors here in the United States are also hoping that the Fed will do the same. However, according to Morgan Stanley, Fed unlikely to signal end of tightening cycle, but peak rates in view. Hello my fellow investors, and welcome back to another stock market update for the week of January 22nd, 2023. And if you guys just saw all of those headlines, it was insane, guys. It was insane. Earnings was just absolutely crazy, especially during like when Microsoft reported earnings. Dear Lord, when they reported earning post-market, it went up like 4%. Then when they came up with guidance, it fell back down to flat. It was just absolutely crazy. Tesla rose a massive amount. Chevron announced a massive amount of buybacks too. It was just absolutely crazy, absolutely insane. And this made the SP 500 rise on the 5-day 2.4%. However, this was done more than just by the earnings. Now, I have over here, guys, Dow, Nasdaq, S&P rise again in earnings. Fed hopes. Now, that latter part is the part I'm going to focus on the most. If we actually come down here, we got what they actually mean by that. So we got an even busier week of earnings report is on tap next week. Right, I believe next week is when Apple is reporting. Right, with financial figures expected from likes of Apple, Amazon, Meta, Google. Meanwhile, the Federal Reserve will announce its next interest rate decision. I believe that is February 1st, so Wednesday, with investors drilling down on the Fed's commentary about the future of monetary policy, i.e. that they're probably thinking that they're going to pivot, because that has been the entire narrative this whole time. The report also showed that the core PCE price index, the Federal Reserve's favorite inflation gauge, rose 4.5% year over year in December. This was slightly above expectations, but still showed slowing price gains compared to the 4.7 seen the prior month. And that is correct. December PCE price index came in plus 0.1% month over month versus the 0.0% expected and a plus 0.1% prior unchanged. So basically, guys, they were expecting PCE to be unchanged. However, it did rise, but over the grand scheme of things, month over month, it does seem to be decreasing, which also fueled this market rally. And then add on top of that, guys, this article, this just came out on the 25th of January. Canadian dollar slips as Bank of Canada signals pause for rate hikes. It goes on to say the Canadian dollar drifted lower on Wednesday after the central bank said it expected to pause rate hikes if economic developments remain largely in line with its outlook. And what most likely happened here is that with everything else that I have just showed you guys, the fact that now the Canadian central bank, which, let's face it, Canada and the United States are pretty much tied at the hip. After this came out, a lot of people here probably began saying, oh, the Fed's going to do the same. Oh, the Fed's going to do the same. Similar as to how when the Bank of England said the exact same thing about a possible pivot happening because of interest rates becoming way too high and not enough money flowing in the system. However, the final article pretty much squashed all of this, and that is that Morgan Stanley said Fed unlikely to signal an end of tightening cycle, but peak rates in view. And the Fed has said this, that their peak is 5% interest rates. So just because they have slowed down the rate of which they are increasing the interest rate doesn't mean that they're going to start pivoting. In fact, a lot of them, even the dovish ones, have said, we're going to go to 5% and we're going to stay at 5% until we see everything come back down to normal. And by the way, I do not know if you guys have noticed yet, but gas prices are actually on the rise right now, guys. As of today, the 28th of January, the average national gas price, it is $3.51. And here in the state of Pennsylvania, where I'm at, guys, it is the average $3.79. I have been to gas stations and I'm already seeing $3.85. So the fact of the matter is that this is going back up. Now, it's going back up in only a few selected states, as you guys can clearly see. However, the national average a month ago, it was $3.13 for regular. Today, $3.51. And even a year ago, it was $3.35. Now it is $3.51 once again. So gas prices are going back up. And if this is a precursor to inflation, just like as it was last time, we might actually see inflation start to rear its ugly head again, and the Fed will have to continue to raise interest rate, maybe past 5%. So that's everything that happened this week, and you can see it was just everything put together. It was just a perfect Sunday of just things happening, and I believe that next week we're going to get the exact same thing, because we are going to get how much the Fed will raise interest rates, I believe in February 1st, and on top of that we have a ton of earnings as well, so get ready for another volatile week. But for now, let's jump into the SP 500 index and see which one was the biggest loser, which one was the biggest gainer for each sector. And starting of course with the tech sector, there was a lot of green here, guys. I mean, we got Microsoft earnings, that was originally like a massive gain and then a massive bomb. The semiconductors gained a massive amount, all except for the one black sheep in the room here, and that is none other than Intel, which they had atrocious earnings. But from what we can see, the best gainer out of this entire sector would be none other than Western Digital Corporation, gaining almost 17%. And the biggest loser would be Enphase, losing almost 5.6%. Coming now into the communication services, a lot of green here. Only 2 of them were red, honestly. So I'm just going to mention both of them. But the biggest gainer from what it's looking like, guys, it is none other than Warner Bros. Discovery, gaining 14.52%, with Paramount also gaining a massive amount, double digits, almost 13.65%. Biggest losers is technically 2 of them, Charter losing 0.43. However, the one that lost the most was IPG, losing 1.27%. Into the consumer cyclicals, the biggest gainer here, guys, I mean, I don't even need to look for this one. Tesla gaining a whopping 33.34%. They went from a low, guys, I'm not kidding you, a low of like almost sub 100. I think it was like $101. Just, I believe like last week. It was crazy. And now, after they had earnings, $177.90. Guess what? I still think that they're overpriced at 101. So at 177, it is way still overpriced for my liking. I did make a video about this, and to all those people who might say, see, you're wrong, it's gone up, I'm like, right. Now let's revisit the idea once this thing falls back down to sub 100, because it will eventually happen. That spike right there that you see is very, very parabolic, and at the end of the day, guys, stocks on the short term are voting machines. Tesla is really, really popular. At the end of the day, the fundamentals do not justify $178 price tag for this company. The biggest loser from what I can see in this sector would be Hasbro's, losing 7.44%. Looking now into the consumer defensives, very half and half, honestly. From what it's looking like, the biggest gainer would be Newell Brands, gaining 5.25%, and the biggest loser would be Colgate Palmolive, losing 5.1%. Looking into the financials, we got here a lot of green, at least very, very heavy green, but also a few little spots of red. The biggest gainer from what it's looking like, guys, would be American Express, gaining 13.66%, and the biggest loser would be Brown & Brown, losing 6.67%. Looking at the healthcare sector, guys, we got a lot of red here. This was by far like the worst one out of all the sectors, and the biggest gainer would be Align, gaining 10.78%, and the biggest loser would be RMD, ResMed Inc., losing 4.32%. Looking into the industrial sector, guys, we got a lot of green here. However, there were a couple industries that were very much in the red. From what it's looking like, the biggest gainer would be none other than United Rentals. I did see an article from this one, though I do not remember what it actually said, but they did gain 13.14%. And the biggest loser would be none other than ADP, losing almost 7%. Into the real estate sector, we got here a lot of green, like seriously, like a lot of green. The biggest gainer from what it's looking like would be WY, gaining 7.15%, which, by the way, WY, I believe that Tony asked me to do this company, like an analysis on this company. So yeah, this is the first time I see them, so interesting that they have gained 7.1%. Sorry I couldn't get to it before they gained this much, but nonetheless, this is the biggest gainer, and the biggest loser would be SBAC, losing 2.62%. Aside from that, guys, everything else is very, very much in the green. Looking into now the utility sector, kind of mixed, though we do have a massive red one over here, and I did just cover this one on a stock analysis and earnings report as well, but the biggest gainer from what it's looking like would be NRG, gaining 4.78%. 3%. And the biggest loser, you don't have to look that hard, guys, NEE, Next Era Energy, one of my favorite companies when it comes to the utility sector, losing 7.63%. This has to do with, I believe, the CEO of their FPL division resigning, and on top of the fact that they also have some lawsuit going on with like the SEC about finance laws in the state of Florida. So I don't think that that's in this for the long term, right? So therefore, this might actually serve as a pretty good buying point for this company. Make sure to check out the stock analysis videos to find out more. Into the most meme-worthy of all the sectors, we got the energy sector. Chevron had earnings this week, guys, and I will put out a stock analysis and earnings report on them at 4 p.m. today. So be on the lookout for that one, because I was just... oh my god, I love Chevron. I really do love Chevron, guys. But from what it's looking like, the biggest gainer would be MPC, Marathon Petroleum, gaining 5.67%. And the biggest loser, thank god it's not Chevron, would be none other than EQT Corporation, losing 3%. And now into the basic materials. Kind of flat overall, but we do have a few red ones, like massively red ones, and a few green ones. From what it's looking like, guys, the biggest gainer would be none other than ALB, gaining 13.37%, and the biggest loser, Sherwin-Williams, losing 6.84%. So as it's looking now, guys, this was the week for the stock market. Absolutely bonkers. So many things was happening, and next week is going to be even worse, because not only do we have a bunch of other tech companies having earnings, we also have the FOMC meeting, and the Fed's going to probably smack the stock market down once again when they're like, we're going to get to 5%, we're not going to stop interest rate hikes, we're not going to pivot, so y'all need to cut out this lunacy of a dream. So let's actually wait until that happens to see what we could probably invest in, what good prices might show up, or if the market might continue to rise. That pretty much does it for this video, everybody. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the new tech sites, link in the description below. So with that said, peace out, and I will see you all in the next stock market update video.